Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending June 12th, 2015. Well, we've had some interesting movement here as we go into or we approach next week, which is the normal monthly option expiry period. Also, the triple witching because it'll be the end of the quarter. And if we take a look at the charts here, what I have on the screen is the E-mini S&P 500 futures. You can see here, I've got a pattern on here that's starting to develop. And let's just what I want to do is just step out real quick and then we'll jump right back in again. So let's just scale out a little bit. This is a weekly chart. And what's really interesting here, and again, think about it from a weekly perspective. This goes all the way back to on this particular chart back to the summer of 2013. Okay, and you can see here that we're still in a good solid uptrend. All right, and let me just change the color on my drawing tool here for just 1 second, but you can see we're still in a good solid uptrend. So right back in this area here, May 2013. Each candle represents 1 week in time, and there's only one time that we really went outside of the channel here, and that was back in the October time frame of 2014. But other than that, we've been fairly consistent. Every time we come down towards the bottom of the channel, then we bounce right back up. You know, you can just see it a number of times. And you can see now we seem to be challenging the bottom of the channel a lot more than we did in 2013 and most of 2014. But nonetheless, we're still in this channel. So, and you can see the upward vector on that channel. It's fairly steep for this period of time. Now, one thing I do want to show you is I've got a Stochastic Oscillator on here, or GETS oscillator. You can see here that it is just a steady downward move in the strength as the market moves to the upside. So that tells me that we're running out of energy. Now, it may take some time to do that, and when I say that, we've been doing it now for about 2 years, but we are running out of energy. Now, if I zoom in, let's come back into the daily. All right, so let me just get you back to the daily, and then we'll go take a look at the pattern that I've got isolated here, and I've been showing our members here. So let me just take it in, and we will go do this. So now, if we come into the daily chart, you can see here's the upsloping trend line and that channel that I showed you on the weekly chart. But you can see here now, looking at this picture, that we've got this downsloping angle here, and then like this, right? So that gives us what really would be a symmetrical triangle. Now, in a symmetrical triangle, you've got a 50% break to the upside, and then of course you also have a 50% chance of a break to the downside. So that's what we're looking at right here. Now, as I guided our members a week ago, it was really a little bit of a different pattern. What we had a week ago, if you guys will remember, we had this pattern right here. We had not broken, and we were in this pattern right here. And that pattern was a descending triangle, and then that favored a break to the downside, and that's pretty much what we had. We had that break right there. We came right down to this upsloping trend line, and then we just did a hard bounce right up to the north of this descending line here that represents the northern part of that descending triangle. But now what's happened is, in the larger picture, because we stopped here, right, and because this was our angle right here like this, as I draw it in, we just poked our head up above there, but we had absolutely no follow through, and we came right back down here again, and this is where we sit. So we're still in this pattern right here. I can't tell you which way it's going to break. In one sense, I would suggest a downside break, but in another sense, I would suggest an upside break. So that gives us that 50-50. We are touching the bottom of this upsloping channel here, the southern end of this upsloping channel, and that would suggest that it's going to hold, and we're going to move back up again. But Friday was not a very pretty day, I think, and pick your trigger. Who knows what the trigger is, right? It could be anything. And I'm not really fond of watching the news after the fact and then having everybody explain to me why the markets did what they did, because you can always find a reason. I don't care. And that's not necessarily what's going on at the time. But there are some stress on the global markets. Primarily, China is kind of a bubblicious kind of territory, as I've told everybody and our members. We've got the issue with Greece, which seems to be just coming in and out of favor every other week. Um, so we've got that issue. We've got the Feds. When are they going to raise the rates? We got a Fed meeting coming up next week, so we're going to get some activity out of that. So pick your flavor of ice cream. It could be anything. But look at this pattern here, folks. We now are sitting right at this area here. This blue dash line represents the opening price of the E-minis in 2015. The red line is the highs. It also happens to be the all-time highs for the E-minis, but clearly the highs for 2015. So we're sitting right in this pattern here below the 50 EMA. So it was not a pretty day on Friday. Now, where are we going to sit coming in? I think we may have a little bit of chop here. Going up into some of the Fed meeting coming up towards the end of the month. I think we're going to have not hard downside, but if we break this upsloping channel, the only time we've broken this upsloping channel was, like I said, and where we held it after market closed was last October, right in this area here. It was very ugly. We broke it. That was the first break after about a year or so of being in the channel. And then I was looking for a follow through, and we got it on the next bar, and then boom, we just went way down south. And we stayed down pretty far until we had a hard bounce up, and then we went right back up to the top of the channel again, and then we've just been testing this channel. So 2015 is kind of like much ado about nothing. But the other thing that I want to show you is we've still got this bearish divergence that showed up. And I pointed this out to our members, and I said the odds do favor a little bit of a downside push. You know, we had a high here, which was higher than that high here. And then we just had that bearish divergence. So we call it, in our group, we call it a bearish divergence. And that means you don't know when the markets are going to go down, and you don't know how far down they're going to go. But I can tell you that the odds favor it will go down, and it's going to show some weakness, and that's what we're getting right here in this pattern. So I do know when price tends to get around a key number like 2055, which is the opening price for the year, it tends to want to find that number. Okay, so if we break this upsloping channel right here, the odds favor is taking out a little interim support at 2068.75 and then finding that number pretty quick. Should that break, we got a little bit of support right in that area there, you know, which is sitting right around 2040, but I'm not sure if that would hold, and if not, then we're coming down towards the lows for 2015. So there are a number of scenarios and a number of things I could point out that could get us down here fairly quickly. So we need to be careful, and I'm telling our members that there are a number of longs that I really like, some that have just taken off like crazy, giving us 200 or 300% potential return, but you still got to be careful. If we look at the Dow Jones Transports, which is just kind of going in the opposite direction, you can see here we made the lows for 2015 back on June 9th, right? And meanwhile, the indexes are near all-time highs. So you cannot have this bifurcated market where you got the transports making lows for the year and the E-minis and the Dow in particular and the Nasdaq making highs or all-time highs. You just can't have that. This is going to have to change. The other thing that's going to happen here this week, I suspect we're going to get, and this will trigger probably some black box trading. That red line is the 50, the 200 is the yellow line. So we're probably going to get a little bit of a crosshair in that. So, and there's the low for 2015 in the transports. Now, we can come up and hit this downsloping line, which there's going to be a lot of overhead resistance right there with the 50, the 200, and the cross in that line, and then a possible comeback down and a retest there should we get some sell-off in the other equity markets. But the trend here clearly is to the downside in the transport. So keep an eye on the transports, because that is one of those kind of things that just, it's typically a leading indicator, so we want to watch it very closely. Now, I mentioned Nasdaq. Nasdaq is near all-time highs. I'll go to the Nasdaq composite, all 8,000 stocks roughly, and you can see here, if I take it out to a weekly and really go out in time, just to kind of give you some perspective on the chart, you're going to see right here the all-time highs. That was the this was made right here. That high was made back in the dot-com bubble. And then boom, we're now finally coming back up and challenging it again in 2015. So it's right at 15 years, almost a decade and a half, that we're finally challenging this number. And you can see how Nasdaq tends to move. It moves in very steep angles, whether it's ascending or descending. I mean, the angles are very steep. All you got to do is just look at history of the chart to see. You can see this steep ascent there going up, a very steep angle there going down, right? We had a nice little channel there for a while until it broke, and we came down and we tested this low here. But now look at this, the steepness of this channel. This is just amazing to me, and we're very close, that green dashed line, of hitting the all-time highs in the Nasdaq composite. I mean, just very close. We got just a little bit a bearish divergence, not a lot, but a little bit. I would probably contend that we're due for a little bit of a profit taking round, and just a little bit of a pullback here. I mean, but it would not surprise me to see the markets make new all-time highs just because they want to do it. So if we come into the daily again, you'll see this ascent. Right now on the daily, you can see that bearish divergence a lot more aggressively, right? It's just, to me, it's just very evident on this daily chart, because if we look at the chart here, you can see that as we're making new highs in Nasdaq, and we're getting close to the all-time high here. I mean, look at that. That is clearly giving us the bed, bearish divergence, which would suggest again downward movement. And again, we don't know when and we don't know how far, but it does suggest this movement. Now, there is some symmetry in this pattern here, because we can come back and we can look at the, let me just clear the thing right here. Let's just come over here and erase the drawings just to show you guys. You can see we had a downward there, downward there, downward there. So, that would suggest a little bit of a move back down to that support area there, right around 5,000. All right. But we could come down and hit this upsloping line. And you can see here we hit it a number of times and we didn't come through it back in January of 2015. But it does suggest weakness to me. Now, we've got option expiry, triple witching, and all that good stuff coming up next week. So the markets tend to be a little bit bullish. But let me tell you, right now, anything can happen in these crazy markets. And I say crazy because if we look at the Dow, you can see the Dow is also showing weakness. Look at that day on the Dow. We came right back below the 50 EMA. We broke this upsloping trend line. It served as resistance. And we're sitting actually just a couple of points above the opening price. 17,781 is the opening price. Just a couple of points up above it. And if we look at the Russell also was fairly weak, but not as weak, as all the other markets. So that's a little bit of a good sign. You can see this upsloping trend line right here with the rut. It's holding up fairly well. It doesn't give me cause for concern just yet. You can see that, you can see these long tails, but we don't close at the end of the day. We're always up above the channel here, and we're just holding it as we're going all the way up. and it was very promising that we only went down just a couple of points on Friday. You can see this shaded box, which represents a nice little support area, which served as support right there. So if this can hold, I do believe we can come up and take this out, but we're not going to take this out if all the other markets continue to get weak. This is going to give it up, come down here and test that line right there. So if this can hold, I think it's going to come up and take out that all-time high of 1277 and some change. If not, then we're going to come down and test this upsloping trend line. So that's a little bit about what I'm seeing here. I mean, it is hopeful that some money has found its way into some of these small and mid-cap stocks. If we look at, and speaking of mid-cap, if we look at the mid-cap spider trust here, MDY, I think is the symbol on this thing. Let me just get it up on the screen here, see if it'll come up. And the mid cap is an area, in addition to the Nasdaq and small cap, where I've suggested people put some money, because it's moving better than the E-minis and it's moving better than the Dow right now. Now you can see the mid cap very similar to the Russell. Near all-time highs, but we're setting up for this bearish divergence. So that does suggest we're going to probably break this trend line and go a little bit lower. So all total, what I'm seeing here is cautious, slight downward bias in the near-term direction, even going into next week. If we look at the treasuries had a big move on Thursday going into Friday. You can see we expected this bounce. I mean, I had called the bounce here for our members off this line right here, and then we got a very strong bounce. I don't mind if it goes higher, because then I'll just sell into this strength. But right now, I think it's going to kind of stall out right in this area here. For those that are trading TLT, which runs in the same direction as bonds, you can see here we came right up and touched that 119.11. I had thought it would come up here to around 119.90 roughly, let's call it 120, and then run out of steam. It may run out of steam right in this area here. It's going to roll back over again. So let's just see how this thing plays itself out. Now, there are a number of currencies that we're playing, and our members, I'll spend some time tomorrow or Sunday night going into some of the currency plays that we have going on, including the dollar, the pound, the euro, and maybe looking at the yen. And the Canadian loon and the Australian dollar. If we look at metal and silver, most people know longer term I'm bullish silver. Near term it can go anywhere. We had a little bit of a bounce, but we're kind of finding some support here with silver. I'm not too concerned about that right now. I'm playing that to the upside, so I'm not really concerned about it right now. Oil, well, oil, I've been playing this all year. And I've been doing strangles on the oil futures market, and I've gone through this in a number of different sessions with our members. You can see where we're sitting here, and we're still in this tight range here. I had projected oil to come up here to around $64 a barrel, and that's where we're sitting right now. We're sitting at about 59. We just went under $60 a barrel into close on Friday. So you can see that tight pattern. Ever since we go back here to about the middle of March, oil has just been slowly moving up, and then it'll consolidate, and then it'll move up, and then it'll consolidate. This is a very long consolidation pattern. Reason being, it's going to take a lot of energy to get it up higher than this. I think we may go a little bit higher, but I just don't give it a lot of strength beyond that. So that's pretty much where we're sitting on oil. And the other one is energy and meats. We've got some opportunities there. Not energy and meats, but we've got some opportunities in agriculture and meats, and then there's nothing in the softs right now that we're looking at, but for our members I'll go through that, as well as some of the possible longs that I've talked about. I think as we get through some of the sector rotation, we've talked about a couple of sectors getting stronger, others getting weaker. So, we'll go into that also Sunday night. If you're not a member of our group, I'd highly encourage you to come on in and check us out. We got a number of different membership options. If you have any questions, just click on the Contact Us button and send me a note. I get them all the time. So love to have you on board. Otherwise, have a great remainder of the weekend. And members, I will see you on Sunday night at 8 p.m. New York City time. Have a good one, everybody. Ciao.